Every dynasty believes its fortune is eternal. Every heir assumes their inheritance will last forever. And every time, the story ends the same. From the Gilded Age Vanderbilts to the industrial barons of Europe, from shipping magnates to tech titans. Individuals have woken up to find their family's empire worthless, their birthright meaningless, and their futures stolen by a complacency they thought was security. Extinction isn't rare. Extinction is the rule. The real question isn't whether great fortunes are lost. It's how you avoid the pattern that destroys them. The illusion of permanence is the most dangerous financial mistake of all. We look at our family's legacy, our inherited assets, and we assume they are bedrock. But wealth is not bedrock, it is momentum. And momentum can vanish in a single generation. That's why history is so brutal and so useful. Every squandered fortune leaves behind a trail of lessons, patterns, and warnings about what actually preserves wealth and what evaporates into dust. And if you pay attention, you'll see that the families who survived weren't the ones who inherited the most. They were the ones who understood the fight. First, take the story of a man we'll call Julian. He wasn't born into wealth. He was born into an empire. His great-grandfather, a man forged in scarcity and driven by a relentless ambition, had built a global shipping conglomerate from nothing but a single, dilapidated vessel and an iron will. The family name wasn't just on the side of ships. It was etched onto port authorities, commodity contracts, and bank ledgers across 3 continents. When Julian came of age, he inherited a fortune so vast it defied comprehension. It was a self-sustaining machine of dividends, real estate holdings, and equity portfolios, an economic force equivalent to the GDP of a small nation. For him, financial failure wasn't just improbable. It was a concept as alien as poverty itself. His life was pre-written, a script of effortless luxury, guaranteed and insured by the sweat and sacrifice of generations he'd never met. He was, for all intents and purposes, a modern-day emperor, inheriting a kingdom he believed could never fall. The downfall wasn't a sudden crash. It was a slow, majestic decay, like a great ship taking on water one imperceptible leak at a time. Julian's life became a masterclass in decadent consumption. He acquired fleets of vintage cars he rarely drove, yachts that seldom left their moorings, and art collections that remained crated in climate-controlled warehouses. His parties were legendary, extravagant affairs that bled money with the sole purpose of dazzling a circle of equally detached socialites. While his great-grandfather had walked the grimy docks and negotiated with hardened sailors, Julian conducted his affairs from penthouses in Monaco and ski chalets in Aspen. He was utterly disconnected from the core business that fueled his existence. Board meetings were a nuisance. Financial reports a bore. He saw the family enterprise not as a dynamic, living entity that required constant vigilance, but as an infinite, magical spring of cash. As he drifted further from the engine of his wealth, the world began to change. New shipping technologies emerged, global trade routes shifted, and aggressive, leaner competitors started to chip away at the family's market share. The seasoned executives his father had put in place began to retire, replaced by sycophants who told Julian what he wanted to hear. Warnings about declining margins and lost contracts were dismissed as pessimism. Suggestions to modernize the fleet or diversify into new logistics sectors were ignored as unnecessary complications. Why adapt when you are the establishment? Why innovate when you are the empire? He began leveraging the company's solid assets to fund his lifestyle, taking on debt against properties and stock holdings that had been untouched for decades. The foundation, once solid granite, was being hollowed out from the inside. The fortune wasn't just dwindling, it was being systematically dismantled, sold off piece by piece to pay for the illusion that nothing had changed. The climax was not a dramatic bankruptcy filing splashed across the news. It was a quiet, pathetic end. One by one, the assets were liquidated. The homes, the yachts, the art, all sold to cover debts that had spiraled out of control. The company, a hollowed-out shell of its former self, was eventually absorbed by one of the very competitors Julian had once dismissed. In his final years, he lived in a modest, rented apartment, a ghost haunted by the memory of a life he had taken for granted. He died with almost nothing to his name. A man who had inherited an empire and squandered a legacy that took 3 generations of grit, genius, and sacrifice to build. He had successfully overseen the complete and total annihilation of his family's economic dynasty in a single lifetime. This personnel tragedy is not an outlier. It is a case study for the pattern everyone ignores. A cycle so predictable it has become a proverb in cultures across the world. From shirt sleeves to shirt sleeves in 3 generations. The first generation. The founder is the force of nature. They are fueled by hunger, disciplined, and an intimate understanding of risk. They build something from nothing. Their hands dirty, their focus absolute. They know the value of $1 because they remember the pain of not having one. Their life is defined by creation. The second generation is the steward. They grow up witnessing the struggle, but from a comfortable distance. They understand the business and respect the founder's work ethic, even if they don't fully possess it. They are often well-educated, professional managers who focus on preserving and moderately growing the established wealth. They maintain the empire. Their life is defined by maintenance. Then comes the third generation. They are born into a world where wealth is not a goal to be achieved, but a fact of life, as natural as air. They have no memory of the struggle, no connection to the source of their privilege. The founder's grit is a distant myth. The second generation's diligence is just a boring lecture. They see the family fortune not as a responsibility to be stewarded, but as an entitlement to be spent. They inherit the results, but not the process. The hunger is gone. The discipline is absent. The fear of failure, the single most important motivator for the founder, simply does not exist. Their life is defined by consumption, and so they become the agents of destruction, completing the cycle and returning the family to the shirt sleeves from which it began. Julian's failure, then, was not merely about overspending. It was not about the yachts or the parties. Those were just symptoms of a much deeper disease. He had lost the founder's soul, the relentless drive, the obsessive attention to detail, the healthy paranoia that someone, somewhere, is always trying to take what you have built. He inherited the crown, but forgot the weight of it. This is the pattern that echoes through the halls of history, from fallen dynasties to bankrupt family businesses. It proves that the skills required to preserve wealth are fundamentally different and often harder to learn than those required to earn it. Earning it requires hunger. Preserving it requires wisdom, humility, and the discipline to live as if you are still earning it. But here's the part loyal viewers will appreciate. You think they would have learned from the Vanderbilts?